What's going on, everyone? I am Charles Moon, the disciple of trend, and this is my podcast, Buy High, Sell Low. Just want to mention that stock and stock options trading does involve a substantial degree of risk and may not be suitable for all investors. Past performance is not necessarily indicative of future results.
Welcome, everyone, to the Buy High, Sell Low podcast, infotainment at its finest. I am your host, the disciple of trend, Charlie Moon, bringing to you today a little commentary. Now, I got a really good response on the last video, right, on basically the breakdown of light. I can give you a breakdown of really just names to watch today, but I'm going to give you one in particular, and I'll kind of explain why. Of course, why? What's the point of me not, mentioning a name and not really explaining it? So, on the chart right now, folks, is the Dow Jones. We all know what the Dow Jones is. When the markets talk about, the biggest gainers, it's not the S&P. They do mention the S&P, but there's always talk about the Dow Jones. It's 30 old companies that's supposed to determine the health of the overall markets. But as of late, ladies and gentlemen, the Dow has been probably the best performer, more so than tech. And the SPOOs are just chugging along. But what I noticed with the Dow names is that they've shown a lot of strength. What I mean by the Dow names are the Dow components, the 30 companies that compile the Dow Jones, Intel and IBM and McDonald's and HD and Goldman Sachs and JP Morgan. I could go on, but ultimately you could see where the reference of resistance has been. It was at the previous all-time high before the market collapse of last year. And then you could see the trend that we've been on. These are those so important moving averages that we talked about in previous podcasts, and you could just see how the Dow is just completely outpacing and trading well above. In fact, this little gray line I have right here, I'll highlight it. This little gray line right here is a 20-period simple moving average, which is a very short-term moving average. Look at how far extended the Dow is away from this level. So that's just telling me there's just screaming upside strength. And we talk about breakout tendencies and where they tend to occur. We see them at highs, but all-time historical highs. Yeah, here we are. Open near lows, close near highs, open near lows, close near highs. Just range extension once we got above that key magical resistance level. But today, the name that I want to talk about is a Dow component. A very important one that's been in the news, one I don't think gets enough love because it has ties to China, and so there's been concerns over the tariff and trade deal, right? And this potential trade war that's come into play. But Nike, ladies and gentlemen, Nike is a very important name in my opinion because this sometimes acts like a momentum name. Now, it doesn't swing consistently and crazily, but it has at times moved with a lot of vigor, only to be found with a lot of demand. And look, I know there's a lot of squiggly lines out here. Just try and stick with me, all right, folks? I'm trying to make this as simple as possible. So we talked about the Dow components, where a lot of strength has been. You could see that on Nike's earning report right here, okay, they actually came in slightly below. But the key factor in their earnings that really kind of stuck out, in my opinion, was that there isn't going to be any significant fallout for the company from the tariff deal as of right now. With the trade issues at hand, they're not facing any significant repercussions. It's not like SWKS, Skyworks, and Cuervo and other names that have downgraded guidance because of the Huawei ban, because of the trade deals. No, Nike stands to be unaffected to a degree. And And they're even talking about pulling out of China and, going somewhere else for production. It wouldn't surprise me if they targeted Vietnam. But ultimately, we talk about the Dow Jones being in the breakout mode. Look at the respective behavior of Nike. I really wanted a pullback. I have this highlighted here. I really wanted this pullback to 85s. I don't think it's going to happen. And in fact, I think what Nike is poised to do if the Dow continues higher is that at that also important $90 price, okay? Ever so important, 90 evens. It went from basically 90 to 77s and then back on up. What is Nike going to do at this price? My belief is that with the Dow moving up so strongly, that once Nike gets above 90 and they rest, we're talking about targeting 96 to the $100 level in a very short period of time. Now, ultimately, even if they don't happen to break above 90 immediately, what I really would want to see at this point is if Nike extends to $90 and they reject, when they come back to this like $86, $87 price, are they going to find that immediate support? There is an old double top here, so that could be looked at as potential resistance turning into support. And if we see that the previous ceiling becomes the new floor, that is a very bullish sign. Now, even if it doesn't hold at that price level, for me, anywhere from 85.50 all the way to 83 3/4 right now, there's just a ton of key technical support that I'm seeing with Nike. And so with the way that the Dow's been behaving, okay, now this may not be suitable for the investors. This is more suitable for, let's say, near-term traders, shorter-term traders, people that are looking for 3 to 5 day entries, people that are looking for 10 to 25 day entries, shorter term. Now, some people may say 25 days, that's not really short term. Well, everything is relative, right? Not everybody is comfortable being that active in the overall markets. So when you're not nearly that active, it's even more important that you find and discover strength and find names that could have that continual strength. The importance of trend. For me, seeing the way that the Dow is behaving, going into this breakout mode, and seeing where Nike is, seeing that the potential for Nike to potentially go into that breakout mode, it kind of comes to this perfect storm. Now, if they reject at $90 even, there's a chance that 87, 85.50, 83 all doesn't hold. But I also think that if the Dow continues to climb and we're just in this risk-on environment leading up into the July FOMC and then beyond, especially if now that we're wrapping into earnings season and companies are really performing well on earnings, which I wouldn't expect to, by the way, right? I don't expect companies to give, just glowing guidance. It could happen, of course. I just don't think it's going to happen in Q2. But let's say it does. Let's say earnings season's really good and the Dow's just in a risk-on mode and then we're just rallying into end of July and then rallying up into September because we believe that, a second cut is coming into September. It would be hard-pressed to say that Nike won't be above $90, especially if the Dow is going to continue to climb, especially if Dow is becoming the actual leader to the upside here. And that could even be more apparent as we have the banks reporting here soon. So if JP Morgan and Goldman Sachs blow these numbers out the water, and their stock is up 4 or 5%, and we see the stocks gain, it's going to be very difficult for the other 28 components in the Dow Jones not to move forward if the Dow is moving up 1% average a day over the, let's say, next 2 weeks. Now, I don't expect every day to be risk on, right? Meaning positive. But there's a chance. We've seen it before. We've seen the markets just go into this like auto up mode. Why can't it happen again? And the problem is everybody's so afraid that we're top heavy. Yeah, we're top heavy. We've been top heavy for years, guys and gals. This isn't the first time the Dow has made record highs. So what's the difference between now and then? Because of the value? I don't think the markets really care about that at this moment. I think the markets are just in this autopilot mode, and it's just been very consistent. Be afraid if, let's say, the NASDAQ, I'll pull up the Qs. Be afraid if the NASDAQ drops 4% in a day. Because it's those types of signs that basically warn us of something terrible to come, which is generally extended sell-offs. You could see it right here. You could see it right there. But what's the cause and effect? Okay, so let's talk about it. The cause right now would be that markets are starting to price in potentially the second cut already, maybe even a third cut this year. Maybe it's an aggressive half-point cut with anticipation of 2 more quarter-point cuts because they want to be preemptive in case things go bad between the U.S. and China, right? In terms of trade deal talks and working on a deal. So that's our safeguard. What happens if President Xi and then President Trump all of a sudden like, hey, let's sign the dotted line? What do you think the markets are going to do? Are they going to sell off? No, at that moment, I think tech would actually help lead the way. That wouldn't surprise me at all. Like the semiconductors would just go nuts. But let's be honest. It would be broad. It would be the macro markets all moving up. Happy, no concerns. Buy, buy, buy. Buy, buy, buy. Buy, buy, buy. This is why Kramer has a job, ladies and gentlemen. The contrarian trader, the naysayers, right? The doomsday revelers, I don't know what you would call them. The things that I hear sometimes surprises me. Let me forewarn you now. There's going to be a crash and it'll be bigger than anything expected. Let me know something, guys and gals. If the market starts going down, you either A, can start closing out and look to sit on cash and maybe redivest later on, or B, you protect yourself by buying protection. It's pretty simple. All I could say in that statement, right? I'm not an investment advisor, but I have to be very blunt here. Care about your money. Care about it. If you don't know, take time out of your day, your week, your month to figure it out. Whether you need help from experts like us, myself, whether you have an investment advisor that you trust, maybe you just don't want any exposure and you want to pull out, whatever you have to do. I always tell my clients, trust your gut, because your gut is the same instincts that'll save your life, right? That same feeling like you're in danger. It doesn't go away just because it's the financial markets. What gets people in trouble is the fear of missing out. That is what gets people in trouble. Don't be that person, guys and gals. If the markets turn down, for me, it's just another opportunity. Protect yourself. So we talk about it, right? What is the FOMC going to do? Okay, let's say they make these moves, right? 2 to 3 cuts. Up to, let's say, a full basis point, maybe 1.25 basis points. Or we get our trade deal done. This is what I mean by a risk-on environment, because when you hear these scenarios, the market most likely is going to react very positively to either one of these scenarios. we may have a shakeup. We've seen the shakeups before. It's okay. How many of you would wish the markets to drop 5 to 10% to allow names like Amazon to drop 35% from these levels so that you could buy back in? Because I'm pretty sure you would rather buy into Amazon at $1,600 versus $2,000. There's people that are listening to this right now that said, man, gosh darn it, I should have just bought in Amazon on the dip. It's an opportunity, guys. Embrace it. Embrace the pullback. And that's what I want to do in Nike. I want to embrace the pullback. I'm not really one to buy in at highs regardless, but yes, I could understand the breakout theory, the theoretical idea of buying in to capture short-term momentum. Perfect. For me, I want to buy in on the dip because the Dow is so consistently strong. All these Dow components are trading above all their moving averages, both from the very near term to the long term. The behavioral chart pattern on the Dow Jones right now is showing risk on, breakout, theoretical, open at lows, close at highs type of strength. And that bleeds in and can only be created when the mass majority, if not all of these components, are showing the same type of behavior. And if you look across, when you do your due diligence on these Dow names, look at HD, look at even IBM. IBM is on a trend up. Nike, Goldman Sachs, and JP Morgan are breaking out of their daily charts. We're seeing it across the board. I mean, Cisco's right back to their 52-week highs and ready to go after they just bought out a company. I'm telling you, ladies and gentlemen, I love tech names. I love tech names. I love momentum names. I also love when stocks show me strength and show me weakness because it makes it easier for me. I just have to find a reason to get in. I need it to be at least palatable enough where it's not just a coin flip. Where if I played the scenario out, let's say 100 times, same trade, same time, same opportunity, same risk parameters, where I only have to be right, let's say 34% of the time, theoretically, for me to be break even. Whereas if I'm buying in at like peak value, right, with much wider risk parameters and maybe potentially smaller reward parameters, that puts it inverse. That means I have to be correct that 66, 67% of the time for me to be break even. So I don't ever encourage that for our clients because we're humans. We'll never be able to just be perfect. The ones that could just trade at a high win-loss scale, generally speaking, will also go through some downtrends. They just have to. It's just the laws of averages. Not unless they're going for very small gainers. Then yeah, I could produce a really high win-loss percentage, but are you really making great money? The thing is, ladies and gentlemen, as humans, right, with the broad markets, with each individual stock being their own little lifeline, there's going to be a lot of errors that come into play when you take on trades as a trader. Don't get discouraged. Sometimes it's just an issue of timing. That could be fixed. Sometimes it's just a recognition of opportunity. That could be fixed. But constantly putting yourself in a bad position and not a position for success cannot be fixed. Not until you decide you want to make a change. And so for me, I subscribe to the theory that I don't need to be perfect. I don't want to be perfect. I don't want that pressure on myself. So I go with the route that I find value and opportunity in names that have shown me strength, than names that have shown me consistency. If it doesn't work out, it's not going to burn me where I have to worry about the next trade and the trade after that, where I'm always going to be forever licking my wounds. No, I don't like losing. I hate it. I love winning. Very competitive. But I'm not ever going to say it's maybe not this time. It'll work out. I subscribe to the theory that if something tells me to get out, I get out. I don't care. It could work out in my favor. I don't want to get caught up into that cycle, because what happens to the one time it doesn't work out? Ask the people in GE that are holding. What about VRX when Ackman was averaging in from 200 to 180 to 160 to 140 and last ditch effort at $28, and then I believe VRX got to like $6. A multi-billion-dollar position melted away. I don't subscribe to that. Yeah, it may work out for you that one time, but it only takes that one time where it doesn't work out, where it just sets you back. Remember, it's a butterfly effect, both from, a capital standpoint to a psychological standpoint, folks. So keep that in mind, all right? Keep that in mind when you decide on what you want to do in the markets. Don't just buy because you like a name. Don't just buy because you heard news and you saw it up one day. Little research. I highly encourage you to start learning charts. I have retired school teachers that have never looked at charts before that are now actually picking out support and resistance levels. Charts, it's not magic. If anything, it gives you structure. It gives you real structure. People say that I trade with the plan. Oh, I'll buy it at Nike at 89. I'll put my stop at 88. If it goes up to 90, I'll cash out. Okay, I commend you for at least being very robotic in your approach. But the question I say is, why do you only allocate a point if, let's say, Nike requires you to allocate more? Because it's been volatile because of news lately, because of the broad markets lately. You can't force the trade or the markets to adapt to you. You have to remember, guppy, ocean. You are the guppy, the market is the ocean. A lot of fish out there, a lot of bigger fish. Adapt to your environment. You will get further. You will gain more. You will lose less. Trust me on this, guys and gals. Now, let's go back to Nike. We'll wrap this up here, okay? Why do I love Nike besides just being a Dow name? All right, so a lot of people think of Nike and they say Tiger Woods, they say Michael Jordan, they say LeBron James. It's the biggest name in sports. Yes, but being just a big brand name is not enough, right? Why has Apple rallied? Not just because of the iPhone. In fact, for the last 3 years, it had nothing to do with the iPhone. It has everything to do with their services. These companies have to find ways to attract new investors, to sustain their ecosphere, right, as a major brand, and to keep the money piling in. Why, and why? Because it's important for a company to show growth and revenue. Stagnant companies don't gain in stock price. They don't gain in value. So what has been the driving force for Nike? I'm pretty sure a lot of people know, but if you do not know, here is the reason why. And if anybody tells you anything less, laugh at them. Okay? Just give me a second to hear me out. It is simply because of the shoe aftermarket. If you don't know what I mean by that, there is an actual aftermarket for specific shoes. It actually started with the flagship shoe that Nike has, which is the Air Jordans. They make limited editions. People buy these shoes, and then they put it on a third-party auction site. eBay, for example, is one of them. The most popular one right now is StockX, who actually I think they just started raising capital to potentially go public. It's insane, folks. We're talking about billions of dollars. Okay? If you haven't heard of this, you might just have to wonder, have you ever heard your kids mention something called the Yeezys? And I'm being very basic, okay? There's people laughing at me. Listen, there's so many different types of limited runs. And then there's reruns. And then there's drops. And then there's collab works, right? Right? I mean, we're talking about, let's say, Nike, for example, the Off-White series with Ablo, right? I mean, these shoes are going for thousands of dollars, guys and gals. Retail, $300, $400, $199, maybe $299, and they go for double, triple that amount. Depending on the release, they may only fetch 40% on the retail price. But depending on the actual collaboration, they may fetch 10 times their retail price. The flipping game, right? The flip, it's gotten so sophisticated that people are using shopping bots for their carts to secure these orders. And in turn, they just basically are working as middlemen and just collecting the fee in between, whoever the shoemaker is, whether it's Adidas or Nike, and whoever the consumer is. ADDYY. Yeah, that's Adidas. I'm just going to show you the chart. I don't know. I mean, why do you think why do you think Adidas is performing this way? I don't know. Maybe the 3-stripe tracksuits making a comeback, guys and gals. It's pretty simple. The shoe game is insane. Price points for shoes are only going higher. There used to be only one or two shoes that used to be over $150 to $200 in either Nike or Adidas's line. Now there's like tens, hundreds in some instances that are over $135 to $200 consistently. And new lines are dropping. It should be once a season, but I mean, we're having re-releases coming out all the time. And because of this demand, even though these are limited editions, because they're bringing so many out, because of the collaboration work, because of the hype that's getting involved, because that Nike and Adidas is actually not only focusing on sports apparel, but they're now really transitioning to street apparel. This is a genre that, they've kind of been playing around with. They've had some notoriety with over the last several decades, but this is where they've actually transitioned, hired designers, created lines that are specifically for nothing but designer wear, as in like street gear. Because it's the cool thing right now. You think I'm kidding? If you go on Adidas' site, if you go on Nike's site, they're charging prices that you would pay at Lululemon for track pants and t-shirts that are going for $50. T-shirts, $50. Nike, Adidas. And if you think about it, folks, just 5 years ago, people would be like, are you kidding me? Honestly, are you kidding me? You want me to pay $50 for a t-shirt? But yet here we are. All these lines, this demand, this hype beast, this rolling hype beast. And this is, you could think social media for this. You could think, the music industry for this. So YouTube. But ultimately, it's demand. They are the supply. Dow is rallying strong. There is a key technical level at $90 in Nike. That is your short-term ceiling. If you take a look, and I'll pull up DIA, by the way, okay? If you take a look at DIA, that's a pretty big jump here that's taking place. This breakout from those highs after it peaked out and broke above resistance. That is what we could have potentially here in Nike. We just haven't had that opportunity yet. Again, I actually want to see Nike go up to this price level, hit that price level, and then come back down here. I will gladly look to buy the dip. Basically from this range to that range. Now for me, I'm not just going to blindly buy. We want to see some technical support in play. I have my eyes on this name because it's earnings season. When we get to earnings season for the Momo Room, it's tough for us because we got to kind of stand around and look for proper opportunities with a very limited list of names. And maybe some name in the sector gets totally bombed, and that would just basically restrict that opportunity to the buy side, more to the sell side. So it's a more of a difficult time for the Momo Room where we kind of have to run through, a minefield. But if we could successfully get through it, we could get ourselves into some very good, fundamentally driven names that could look to blow out. Remember, Nike, since earnings, is up. There's a key level above where the breakout could take place. If support comes in on the dip, my anticipation is that they're going to go back to 90. Now, if they hit that 90, come back and find support and turn back up, we in essence are still making that higher high, higher low. Now, theoretically, of course, there's a chance that Nike could hit 90, come back and hit 90 again and reject. And it would, in essence, come up as a triple top. Key resistance. But that's okay. That's why I don't want to buy here. I want to buy down here. That allows that buffer in case it does reject, that we could either bail out or you just protect yourself and simply manage through your position. Take a little risk off, let the rest ride out. If you buy in here and it breaks, well, that means you got in at value, and instead of buying here and then catching the breakout, you bought in here, you already got it in good, and then the breakout is just icing on the big old piece of cake that you are going to be enjoying because the Dow is going to be in this up move and the markets are strong, and you're basically in a position where it's not like you're facing huge swings and volatility. It's probably going to be a very comfortable and autopilot type of ride up. Now, I was a little all over the place with this podcast. I brought out a lot of information, but I hope this helps you understand why I like Nike. The streetwear game is strong. Google Supreme, for example. Google shoe aftermarket. Google Nike Jordans for sale. Google StockX. Do your due diligence. See how big this market is. And if you did not know about it, this is only going to give you another reason, if you already like Nike, to like them even more. I'm a big fan, folks. Not just because I used to collect shoes and I was ahead of this game and now it's so diluted I'm out of it. It's not because I'm a Jordan fanatic, which I am. I'm from Chicago. Yes, this is a Colorado hat. My wife's from out there. But all my other podcasts, I have Bulls, Bears, and Cubs hats on. I'm a big-time Chicago fan. So, yes, I love my Jordans. That doesn't escape the fact that this is a multi-billion-dollar industry, and it's only growing, and the demand is getting up. And that Nikes And Adidas wear is just selling more and more. The hype is still sustaining. They said the fad would be gone, and instead it's grown. And it's getting bigger. And more collaborations are in the works. And the demand is increasing. Nike basically is taking the same shoe and slapping on different skins and saying this guy or this person touch it, and the masses go nuts. It's pretty ingenious because your margin is basically the same. It's probably more because you probably anticipated your margin based on a certain amount of sales of the same shoe type, and then all of a sudden, let's say the Jordan 1s are now being rebranded in 15 different colors, and you've sold 30 times as much as you thought you would, which is kind of what's happened with Nike. I love the upside, folks. If the Dow continues up, I just can't see how the markets ignore this name. Keep this on your radar here, folks, all right? Now, let me know what you think down in the comments below. Is Nike too expensive? Is it overvalued? Do you see value? Do you even understand what I mean by the shoe aftermarket game? What do you think the Dow is going to go from here? Are we on our way to 30,000 by the end of summer? It sure looks like it, but I don't want to get my hopes up like that. Guys and gals, hope you enjoyed the Prospect podcast. If you haven't subscribed yet, make sure you do so. Again, make sure you comment. If you have a question, send it to me, podcast@Prosper Trading. Follow us on our socials, my company @Prosper Trading, myself @The Disciple of Trend. I want to say thank you for your time, folks. Let me hear from you. Last but not least, if you liked it, if you enjoyed it, make sure you tune into the next one and share, because sharing is caring. Have a good night, everyone.
Don't forget to like, comment, and subscribe. Also follow us on our socials, Facebook, Twitter, and YouTube. If you have any comments or questions, you can email me, podcast@prospertrading.com. Thanks, everyone.